Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for the segment, we have Tyler Ellegard, Portfolio Manager at Gradient Investments, to discuss why market breadth should continue to expand through the end of the year. Tyler, it's great to have you with us. Welcome to Trade Talks.
Yeah, thank you for having me.
You got it. So it feels as if the market's taken a bit of a breather here. What are your expectations as we look into the end of 2023? Do you think we'll continue to see trading range type of trade, or perhaps a little bit more volatility? What are your thoughts?
Yeah, I definitely think we'll see some uptick in volatility. We actually expect the market to actually continue this breather going forward. If you look at history and look at what the S&P does when it's up over 15% through July, you do actually see August as a pullback month, and then September is more of a flat month, and then after September, October through December, you usually see the markets up about 3% after that. So we expect a little bit of a breather here. History's on our side to tell us that. But then we do expect a little bit stronger end to the year as we round out the end, based on the fact that we'll start to look at 2024 estimates, or start to include all of 2024 estimates into our expectations, rather than a little bit of the Q4 earnings expectations that we still have in our models.
Well, a big narrative this year, of course, was the Magnificent Seven and the participation that it had with market performance this year. Do you think that we're going to continue to see breadth widen out a bit and look to other companies and other sectors to contribute to 2023's performance?
I do actually. That when we talk about this pullback that we might see in the markets, or a little bit of a breather, the main purpose of that is there's going to be a headwind going on for the overall market, because we've seen such a strong run for the large seven, or the Magnificent Seven, whatever title we want to give them right now. So we do think that will be a headwind for the markets, because they make up so much of the total S&P. But as far as breadth and all of the other 493 companies participating, we do actually expect that to happen. They've certainly lagged those big seven throughout this year, but since June, we've actually seen them start to outperform, and so that's giving us some positive keys to tone into right now with the markets, and really play off of picking other options outside of those big seven, and potentially being equal weight to slightly underweight some of those bigger names right now.
Let's talk about macro for a minute here when it comes to inflation. We're starting to see data improve a bit. I don't know, Tyler, I live in New Jersey. We're paying $4 plus in gas. Food store, you're getting a lot less items on the receipts these days for, as much money as you might have spent in 2018, 2019. It doesn't feel like anything is coming down.
No, it certainly doesn't feel like that. I mean, I just filled up my gas tank this morning, and it was I think I paid $3.85 at the pump. So I'm a little bit cheaper than you are right now, fortunately. But yeah, certainly it's a price shock for consumers. But here's the thing we have to remember: is as inflation comes down to that 2% target, or we're at 3% right now, that doesn't necessarily mean that prices are going down, right? It just means that we're up 3% from the 9% that we were last year, right? So we're going to continue to see prices going up at a much more moderate pace, hopefully. And we've actually been pleasantly surprised at what inflation has done over the last 6-7 months. We do think that last 1% that the Fed's targeting, from 3 to 2, is going to be a little bit tricky. But we don't think that any more rate hikes are necessary to continue that tightening. But yeah, we're pleasantly surprised by the inflation numbers right now. It will continue to drag on the consumer, which is something that we are watching. But one thing about Americans is we like to spend our money, and it's showing through the data that we've seen so far. Of course, there is some weakening, but overall, I mean, we feel that the economy is on strong footing still. But the only question is yet to be seen if the Fed can do that soft landing that everybody's talking about right now. We think it'll be a little bit of a bumpy landing, maybe not the nice and soft landing, and certainly not a hard landing, at least from what we can see in the data, but maybe a little bit of a bumpier ride still.
So if you look at other areas in the market, what other sectors on a high level, companies that you're taking a look at outside of the big cap and the Magnificent Seven, whatever moniker you want to attribute to it?
Yeah, well, industrials is one. United Rentals is one of my favorite names right now. But industrials, we've seen an increase in their CapEx levels. I believe it's up 12% or around 9% year over year if you exclude some of the massive companies. So about 9 to 12% in CapEx increases, which is a positive sign. It tells us that companies are still investing. They still want to maintain what they have going. And so if we look at out year earnings in 2024, that tells us that there could be some solid growth there, especially if we do have this bumpy or soft landing that people are calling for with the Fed and inflation, which would allow the economy to continue to grow at a pretty decent pace. And so we want to be in the industrials right now. And United Rentals is one of the names that we will take advantage of that space. The other one is healthcare. Healthcare has certainly lagged the S&P this year. You can look at United Healthcare is a big name that's lagged. Dexcom is another one that we really like as far as med tech goes. But healthcare in general has just lagged the overall S&P. And so we think that's a good opportunity. I know it's a little bit more on the defensive side, but based on the performance that it's had, we think that could be an area of if you feel that there's a bumpier road for inflation, that could be one place to hide out a little bit right now based on the recent performance.
All right, Tyler, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks for having me.